The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January. Only on India Today and Business Today.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-specific questions on this very edition. Over the next 45 minutes, top market experts will guide you on your queries. In case you're here for the first time, the WhatsApp number is now on your screens. Send me your questions about the stocks in your portfolio or onto your watch list right here. I'll be happy to take those questions up with our top guests to guide you through your own personal specific journey of investments in the stock markets. You can also join in via YouTube in case you're watching our show there. On Business Today, go to Daily Calls Live and use the comment section there to send me your questions. A lot of you are already waiting by to ask away your questions. So let me welcome all our viewers as well. We have Jay Kisan, we have Jay Rami Reddy Guram, we have a lot of viewers, Aarti joining in. We have Ramila Devi, we also have a lot of other viewers, Satya joining in. Welcome to everybody, Sheetal, Kamlesh, Vasu, welcome to everybody who's joining in early on the show. We will of course get you started with all your queries soon. Let me first also quickly look at how the markets are taking shape at this point. We're back into the green after some volatility through the course of the first half. 25,784 right now, 50 points of a jump. Most of the sectors have managed to pull up. Metals are leading the show right now from the front, 2% and more higher in trade. Oil and gas and even the broader markets have started to perform well. We have even infra stocks and the banking related names that are performing well. But IT, autos, pharma, these are the laggards at this point in time. But let me welcome our guest on board. Akshay Bhagwat is now joining in to share with us his views on the D Street and to answer your questions. He is the Senior Vice President Derivatives Research at JM Financial Services. Welcome to you, Akshay. Good to have you with us as always. Well, first up, the earnings season has kick-started and so far it's not any big surprise or a negative move at this point in time. How are you looking at the markets which are looking at positive domestic cues, yet at the same time some headwinds remain on the global end?
There is a lot of global factors which are currently dominating the proceedings in the market. For example, today evening there is an important ruling by the US court on the tariff structure which is imposed by US. So these are important market moving events, and also we are looking forward to the budget on 1st of February. That too is an important sentimental builder for the market. So even if you look from a technical perspective, 25,700, 750 zone has been one of the pivotal level, the support which has held since the past couple of months. So this is more of a make or break level for the market. Really, which wave this would swing would depend on the sentimental factors, but it's a choppy market. The volatility index has picked up lately from 9.5 to 11.5. So clearly volatility is the essence of the market. It is a market not for the faint-hearted. So really traders should be very active. Investors should take a backseat. And I would be concentrating more on the budget-related stocks from the current juncture, because sentimentally there will be good positive momentum building in them.
Okay, Akshay, let's get started with some questions, and of course we will circle back to your own choice of sectors and stocks to really look at. But let's take the first query. This one is from Jay, who wants to know for dividend income purely, how would you look at Barmer Lorry? Is it a good time to invest in the stock?
From dividend perspective, yes, you can consider, but at the same time, you also need price appreciation in the stock as well to match the dividends with which you earn. So, Bamal Lorry by default, if you look at the price structure, it is slightly negative. So, if I were to assess this technically, I would be more comfortable buying this stock slightly on dips around the levels of 150 to 160. So, wait for dips is the recommendation in Bamal Lorry.
Okay. Next we have this question coming in from one of our viewers, that is Sant, who wants to know about Reliance Industries and किस लेवल पर इसे खरीदना है, टारगेट स्टॉप लॉस क्या होना चाहिए. हैप्पी मकर संक्रांति. संजी, आपको भी बहुत बहुत संक्रांति की शुभकामनाएं हमारे पूरे चैनल की तरफ से, अक्षय जी की तरफ से भी. रिलायंस इंडस्ट्रीज, यस, Should you buy at this point in time? Already in the New Year sell-off, we've seen about 1.5 lakh crore rupees of sell-off in Reliance Industries already. But do you see a pickup now taking place? And what would your thought process be? Remember, we are waiting for the results as well on Saturday or Friday maybe, and then we will get to know whether the stock move will continue from here on as well. Akshay, what would you suggest?
Yeah. So, happy Makar Sankranti. And see, from a technical perspective, what I assess is that 1600 has been a very crucial resistance from Reliance. For multiple times, there has been strong selling action from those levels. At the levels of 1460, there is a 200-day moving average support on the daily charts, and that's the reason why you are seeing a slight bounce back in the Reliance from the current levels. Now, the reason behind the sell-off was the action by US in Venezuela, which saw a slight concern in Reliance as a stock. And if I were to time the stock from a technical perspective, if you are more a long-term trader or sorry, long-term investor, then ideally I would wait for levels of 1400. That's an important level where I would consider buying this stock from an investment perspective. So again, if you're a investor, wait and watch. 1400 is the apt level to enter. If you are a trader with a time horizon of 15 to 20 or trading sessions, then 1450, 1460 where we trade, these are levels where you can see a slight bounce back in the stock all the way back till 1500.
Okay, I hope this has helped you out in identifying the right strategy of how to approach Reliance Industries. Aarti Jain's question is next. She wants to know from you, Akshay, on BHEL. And she wants to know, can I continue to hold this stock for long term? I already have about 790 shares at 300 levels. What could be the target for this one?
See, if you're long term, then this will take some time to regain its lost ground because from the last, I think, a year or so, 300 is an area from where the stock sees strong selling action. That's the point where profit booking takes over in the stock. And when it takes over, it goes all the way down till roughly 220 odd levels. So, for investment horizon, since you're long term, yes, the answer is continue to hold. If you're open to averaging, then dips around 230 to 40 should be good levels to add more in BHEL. From an investment of 1 year plus perspective, if you are setting targets, then roughly 350 to 375 are the target expectations in BHEL.
Okay. Next, we have a question, and this one is from one of our viewers. On our YouTube again. We don't have your name, sir, but the question is on MMTC bought at 65 odd levels and MIRC Electronics bought at 28 at horizon of 6 months, short period, but target and stop losses if you could suggest on both. MMTC bought at 65 and MIRC Electronics bought at 28.
Yeah, so we're looking at 6 months, and
Yes.
really, this stock is more MMTC to start with is more in a neutral technical setup from a yearly perspective. What we see on charts is it has a tendency to bounce from 45 odd levels, which defines the support for the stock, and somewhere 100, is the upside resistance band. So, from a 6 month horizon, continue to hold. Your stop loss should be placed below 45, and potential target area where you can consider booking out profits should be around 100 to 105. MICR Electronics is the second stock here. This is better compared to the prior stock because here we have a technical breakout on the monthly charts at the levels of 26. This places the stock on a strong momentum footing, which can see the stock moving up till targets potentially till 47 to 50. So hold MIRC Electronics. Your stop loss should be around 23, and 47 to 50 is the potential target you can look forward to with a time horizon of 6 months plus.
Okay, I hope this has answered your question too. Next, we have a question from one of our viewers, Shubham Yadav from Pune. He says, I'm a regular viewer of Business Today. Thank you so much, Shubham, for watching our show regularly. Hopefully, this show is helping you out in your investment journey. He says, I've been investing in small cap mutual funds for the last 5 years, but my returns have been largely muted in the last couple of years. I would appreciate your guidance on how investors should approach small caps in the current market. That's a valid question, Shubham. Usually, whenever we look at small cap space, it is usually done from an extreme long term perspective, because we always believe that in the near term there could be a lot of volatilities, and small caps are really not looked at from a short term horizon. You've been holding on from 5 years, and I could still understand that you are somehow getting a little disappointed with the kind of returns that you've still had on small caps. You're right, over the last couple of years, it's been the large caps that have outperformed more. Akshay, how would you advise him? What is the kind of horizon he will still need to keep to get his mutual funds in small caps to finally, give him the kind of returns that he's been expecting?
See, I cannot comment more on the mutual funds here which he
Yeah.
chooses, but at least on the choice of small cap stocks, my
Yes.
suggestion is if you look at the broader index and you look at the small caps, there is a very diversion in the way the both the sectors are trading. Now, somewhere Nifty 50 basket, which is the index which everyone looks forward to, which is the benchmark index, has performed year in over year in the last I think over 10 years. The returns have been positive, leaving aside 1 or 2 years. So that is the index where it balances out very strongly in blue chip stocks, and with a strong index management, which we can see the way some stocks move, the others stay laggards. The index has been an outperformer in all different scenarios, but small caps has been completely a different ball game. So my suggestion is when you go for small caps, we always look for broader market strength, but the definition of broader market strength doesn't stay the same as it has been somewhere in 2010, 2015. So choice of small caps when you're investing in equities should completely be dependent on the fundamentals. I think as a basket approach, if you go for it, it is a better approach in small caps rather than just banking on a single stock, because then you are going for the bullseye or a jackpot trade. So go for a basket approach. Mutual funds is the right way, but really I would say that it is a difficult call, but overall SIP way of approaching is the best way to look forward to the small cap space.
Okay, I hope this has given you some understanding of, Shubham, how to approach this space. Do keep on asking such questions on the channel. There are various experts who are experts of even mutual funds on our specific shows when we discuss a lot of mutual funds. You can definitely ask away your questions there too. Kalpesh Kacharia from Mumbai, he says, I'm a short seller. I've short sold in January expiry Coal India shares at 441. I'm looking for a target of 415. Is that possible?
Uh, See, you have sorted one of the stocks which has the strongest technical setup, and really, Coal India. If you look at the stock per se, I think out of 7 to 8 months of hibernation, which I may say the stock had been, it has broken
Yeah.
out. So technically, the momentum is very strong. We are also looking at the budget, and normally the energy pack, Coal India, or these are the stocks which are always in the limelight ahead of such important events. So I think it's a high risk bet which you have taken. Technically, at least 450, 460 is the target which I look forward to. So, with a shorting approach which you have taken in Coal India, I would advise have a strict stop loss. Currently, 447 is the stop loss which I would recommend. My view is positive, so I would advise always to take an exit at the best rates, but I wouldn't recommend shorting first of all. But in case you're short, 447 is the stop loss, and try to cover up the stock in case you get a dip somewhere around 425 to 430 zone.
Okay, I hope this has helped you out. Dr. Rajat from Haridwar in Uttarakhand says, Hi Sakshi, I've been watching your channel for a long time now. It's one of a kind show. Thank you so much, Dr. Rajat, for such wonderful words and kind words for our show, Daily Calls. I'm glad that you are a regular viewer, and I'm totally, kind of focused on how you can get benefited from the kind of guidance our top experts are giving you. I hope that this is really helping you in your journey. He says, I have 50 Concor shares, Akshay, at 600 levels, and now he wants to know what is the way out. Should he average his position or should he book his losses? He has a view of only 1 to 3 months. What would you advise him on Concor? This is not Concord Biotech. We're talking about Concor, Container Corp.
Yeah. So Container Corp, look, the stock has been in a downtrend, but if you look at the last 4 years of price charts, there is a very strong technical support roughly in the range of 470 to 500. So that's the area from time and again in the last 4 years, we have seen a strong bounce back tendency in the stock. So giving 3 months of time horizon at the current rate, I feel is a bit less time. I think you should be open to having around 6 months to 1 year view from the current rates, because we are dealing with a monthly support from where the chances of a pullback all the way up till 650 is high. So continue to be invested, give some more time. If you're open to averaging 500, 475 are the good levels to average. Strict stop losses below 450. And I believe with the time horizon I mentioned, 650, 700 should be the targets you can look forward to.
Okay. Next, we have a question from Momita from Kolkata. She says, Happy Sankranti, Sakshi and Akshay sir, and to the entire Business Today television team. Thank you so much for your warm wishes, Momita. We wish you extend the same warmth to you as well, and wishes for Makar Sankranti and the year to follow. The question she has asked is on Aadhar Housing Finance, Akshay. At 537, she bought this stock. Oro Pharma is another one in her portfolio where she entered at 1208 levels. She wants a 6 months view on both these stocks. Aadhar Housing Finance bought at 537 and Oro Pharma bought at 1208.
See, other housing finance, technically it is still strong. Slightly limited data for me, but I think last 5 6 months have been slightly shown a lukewarm response in terms of price action. But broadly, the way the stock has performed since its listing, I think it's still a hold. Right now, for support, continue to hold with stop losses below 440, and I think eventually, from a long term perspective, they should do well. If you can please mention the other stock, I just missed out.
The other stock that she's asked is Oro Pharma at 1208.
Um, Oro Pharma, see, from a longer term perspective, again, 1000 is a good support. Right now, we are dealing with a resistance of 1260, from where, from a monthly perspective, you can see slight bit of weakness again in the stock. But I would say, investment purpose, continue to hold. Eventually, you might see a breakout happening above 1260 and the stock moving for targets above 1400. So, Oro Pharma 2 continues to be a hold.
Okay, fair point. Let's take the next query then. This one is from Swati from Jalandhar. Wants to know about IOL chemicals. At this point in time, she's been holding at 105 odd levels, and she wants to know what target should she be holding this position for.
See, IOL chemicals, the problem is like 2023 to 2026, we are in a range. The stock clearly is showing a pattern where 100, is the point where the stock sees selling pressure, and 60, 65 is the level where it rebounds back. So right now we are in a phase where post testing the resistance, once back it is headed to the supports of 60 to 65. So clearly, if your time horizon is limited for 6 months or 3 months, then it's an exit, because we are looking at downsides right now. 60 is the potential downside target you can be looking forward to. You have to really give more time, 3 years plus, then the situation is different. So right now, I would say better to take an exit in IOL chemicals.
Okay. Next, we have this question from one of our viewers. Again, on our WhatsApp, we have this. This is from GS Arun from Hyderabad. Says, Hi Sakshi, hope you're doing well. Wishing you and your team happy Makar Sankranti. Wish you the same, Mr. Arun. The question is on Bank of Maharashtra. He's got this position of 53.5. 600 shares, and he wants to know now is now at the right time to book partial profits on this stock as well. Remember, the earnings came in and the stock has been hovering higher, 65.6. What would you advise?
My advice is you can hold on, give it some more time. Now, technically, the swing high from where we did see a prior corrective action in Bank of Maharashtra was around 75. So, with the one-way rally which we have seen in this stock since the last 6 to 7 months, I think potential targets are building up till 75. We will need to take a review of the situation at 75, because that's a breakout zone from a longer term perspective. As the price and volume chart indicates, it continues to be a hold. Intermediate targets right now are 75 to 80 zone, and it needs a review further. So hold is the recommendation in Bank of Maharashtra.
Okay, got that. I'll take another query then. We have a lot of our viewers joining on our YouTube too. So let's take some questions from here. All right, let me just ask. Okay, Swapna Reddy says on Tata Motors commercial vehicles, she has a question. Bought 100 shares at 210. क्या प्रॉफिट बुक कर लें या फिर वेट करें आगे के लेवल्स के लिए? ये इनका सवाल है टाटा मोटर्स कमर्शियल व्हीकल्स पर.
सी टाटा मोटर्स कमर्शियल व्हीकल्स पे मेरे हिसाब से थोड़ा वेट आप कर सकते हैं. अभी ये एक नई लिस्टिंग जब स्प्लिट हुआ दोनों
जी.
कंपनी के बाद मेरे हिसाब से ये स्टॉक ने अच्छा परफॉर्म करा है. तो लॉन्गर टर्म आपको कम से कम 6 महीने प्लस का होल्डिंग से इसको रखना पड़ेगा. और मैं आशा कर रहा हूँ कि अराउंड 490 510 पोटेंशियल टारगेट्स बन सकते हैं टाटा मोटर्स में लॉन्गर टर्म होराइजन से.
ओके. जतिन दवे का नेक्स्ट क्वेश्चन है, लिखते हैं हैप्पी मकर संक्रांति. आई हैव आशापुरा माइन केम एट 670. माई क्वांटिटी इज 250. कैन यू प्लीज सजेस्ट अ टारगेट ऑन स्टॉप लॉस फॉर 2 months ऑन दिस?
So for 2 months, right now 800 is the support. It's an important level which you need to note it down. Till it's above 800, the view is positive. Overall, also technically a very sound and strong uptrend is evident. I think 1025 to 1075 are the potential targets you can look forward to.
Okay, let's take the next query, and this one is from one of our viewers on our WhatsApp again. This is Shrikant from Bangalore. He says, good afternoon Sakshi, happy Sankranti. Happy Sankranti to you as well, Shrikant ji. The question he has is on Aptech. He has about 900 shares bought at 298, and he wants to know if there is any sign of a bounce back to recover his losses, or should he exit with losses, switch to any other good share from Aptech to maybe NIIT Learning Systems. Would you advise that at all?
So right now, I think exit Aptech is the call. Now the reason is that month on month, last 6 months, back to back negative returns in price action is what I see. And even if you look at the last 2 years, it's been a one-way fall, which I see on the charts in Aptech, and this probably might stop somewhere around 60 odd levels, which is an important support. So clearly, it's an exit. The chart structure is weak, and in case you're open to shifting to NIT Limited or NIT Learning, I think NIT Learning is slightly better placed, but there's some limited data out there for me. So even NIT Limited does not fit the bill on charts. It's still weak. So I think first thing is take an exit in NIT is what in Aptech is what the call would be.
Okay, got that. We'll stop taking some questions from our viewers for you now, but Akshay, we want to understand from you, what is your concentrated focus right now? Are you looking at earnings play? Are you looking at the pre-budget play at this point in time? Are you looking at safer havens in the markets, if any, in this external environment that continues to give shocks on the tariffs and the policies front as well? How are you playing and what's your focus right now?
Yeah. So right now, if I were to trade, because this is completely a trader's market for the next 15 20 days, as I mentioned in my opening remarks, it is not a market for faint-hearted because the volatility index has really spiked up in the last 4 days, and this is not stopping here. It's going to continue all the way till the budget day. So budget picks is something which you need to look forward to if you're a trader with a time horizon of the next 15 days. So I would give more emphasis on the defense space at this given point of time. In defense space, BEL, Bharat Electronics, is the first name I would look forward to. 418 is the current market price. Technically very sound and strong on the charts. There is a resistance slowly building up since the last 4 or 5 months at 428, 430 zone. But going by the price volume action, I think before the budget, there is a good chance that might be a breakout on the cards above 430 for potential targets of 450 to 460. So buy BL with stop loss below 390 is the trade recommendation. And HAL, Hindustan Aeronautics, is the other name I'm looking forward to. Again, a defense name. This has a support at 4200. Before budget, there can be a slight momentum pickup all the way till 5000 or 5100. So those are the target areas you can work with in Hindustan Aeronautics.
Okay, got that. So defense is something that you should be placing your bets in at this point in time. Stock-specific actions that you can expect, Akshay has already shared with you. But definitely, it's a trader's market for the next 15-20 days up until the budget. It's going to be volatile, not a market for the faint-hearted, clearly, as Akshay says. Thank you so much, Akshay. Always good to have you with us. And thanks a lot for giving a lot of clarity to our viewers, whether it's with respect to their own specific stocks or with the overall markets. Good to have you. Thank you,
Thank you.
for being with us. All right, viewers, we are holding up above that 25,750 odd mark. Let's get into the second segment of Daily Calls now. Welcome another top guest and a favorite on the show, Mr. Kranti Vatini, Director of Wealth Mills Research at, joins it. And he is going to be sharing with us what his own idea of the markets is amidst all the earnings and the pre-budget moves and the external shocks that we are seeing at this point in time. Mr. Vatini, always a pleasure to have you with us on Daily Calls. A lot of viewers always wait for you to come back. So give us a sense of how are you reading into the signals that are coming in both domestically as well as internationally.
Yes, actually, good afternoon to you. Season greetings to you.
Yes.
Markets are in a oversold zone, Sakshi. We are witnessing some kind of a positivity, but we need to see how the day is going to progress, because the reason is, as and when we tend to see some kind of a green on the terminal, but the selling pressure from foreign portfolio investors have been hampering the sentiment of the markets in the medium to short term. So as long as we could able to hold on to 25,500 level, where the market have taken some kind of a support this week, that can be the level to watch out going ahead, because 25,500 level, crucial support zone, there the market could able to bounce back. Now from here onwards, we are in the starting of the earnings season. By and large, the earnings season is giving a positive feeler to the market, but the global cues are not supportive at this point of time. There is a lot of uncertainty that has been looming. We know the geopolitics, how things are hampering the medium to short term the sentiment of the market. But by and large, structurally, if you look, Sachi, Indian markets, despite of the hue and cry across the globe with respect to geopolitics and also rising dollar in India and depreciating rupee, and foreign portfolio investors continue selling and also overhang on the trade deal. But the long-term structure of Indian markets is intact. So any kind of these kind of a knee-jerk reaction or a sluggishness in the market, and thanks to the recent correction, markets were due for a correction. Some kind of valuation comfort is markets are giving right now. If you look at the plethora of stocks in mid and small cap with a good execution skills, with decent managements, and also with earning visibility, these stocks have corrected somewhere around 30 to 40% in the past 3-4 months. That gives some kind of a comfort to make some kind of a fresh entry in these names. A lot of listed space has been broadened up in the past 2 years. So some kind of a entry one can make at this point of time in these new names also, because these majority of these stocks, they were in a consolidation phase and the valuation levels are looks comfortable at this time. I don't call it as compelling, but comfortable at this time to make some kind of a entry at this point of time. By and large, just watch for the things that are going to unfold in the next couple of weeks, how the crude oil price is going to be, and the earnings season in India, and the big budget day is much ahead of us.
Yeah.
So what kind of policy making directions we will get. But Sakshi, one thing is, by and large, it's clear Indian market is a market to buy at dips, but selling at rallies is the individual independent decision, depends upon the cash flow of the investors.
Okay. Let's start taking some questions, Mr. Vatini. A lot of our viewers have been waiting for their questions to be answered now. We'll take the first query for you, and this one is from one of our viewers who has multiple questions actually, Priya from Jharkhand. And she says, I'm a regular viewer of your show. This is a great show for investors and traders like us. Thank you so much, Priya. This really is Really kind of you that you shared such wonderful words for our channel and for the show as well. And we truly hope and aim that you are able to take the best of market investment decisions for your portfolio with the guidance of the guests who we bring to you on our channel as well. She has okay, we'll take two questions from her entire list of questions, two stocks I mean. First one is Jamna Auto. Mr. Patini, 115 is what she has bought this stock at. The second one is Samvardhan Motherson, where she's bought this stock at 117 odd levels. And both are again from the auto ancillary space. Currently, 128 is the level at which Jamna Auto is trading at. The good part is, despite today's 4% losses, you are still holding in profits, Priya. Second one, Samvardhan Motherson, let's bring that stock also up. And that one she's bought at 117 levels. So let's find out what is the outlook here as well. Currently at 114, not too much of a loss there. But Mr. Patini, what would you advise?
Sakshi, my advice to the investor is just hold on both the stocks, Samvardhan and Jamna Auto. Autos had a strong rally in the recent past. The auto ancillary companies also expected to do well. But with respect to Samvardhan or Motherson is concerned, they have some kind of a global exposure. But by and large, these are the decent companies. In the medium to long term is concerned, one can hold on to both the stocks. This quarter results are crucial. By and large, we can expect a positive quarter for these companies. So if the investor is a long term investor, she can hold on going ahead.
Okay. Let's take the next question. This one is from Rajni, and she's from Hyderabad. And Rajni says that I have a question on EMBDL share prices. Embassy Developments is what she's holding on to. She has about 109 shares. What exactly at 112? I think she bought it. I'm not sure what your question is, but she's looking for a target and stop loss here. Would you be able to advise or give a broad idea of Embassy Developments right now?
Last 2 quarters, the results have been on a negative front, Sakshi. But the real estate space is in consolidation phase at this point of time. If the investor taking this position as a trading position, there is a small pullback we're witnessing in this stock. But in these kind of markets, and as the entire sector is in a consolidation phase, these kind of stocks tend to struggle. Last 2 quarters, the company has posted losses. Any rally in this stock, one can exit in the medium to short term.
Okay. Next we have this question from Avdish Thakur. Says, I want to know about IRFC. Any fresh entry that's warranted for the medium term?
Some kind of pullback and rally. We witnessed a sharp vertical rally recently. We witnessed it, Sakshi. Still, given the kind of ahead of budget and a lot of positivity with respect to the railway expansion of budget is concerned, infrastructure spending is concerned for the railways. So the budget can bring some kind of a positivity for IRFC. One can expect from still this range also 10 to 15% potential upside for this stock.
Okay, let's go across to the next query. This is Diganta Sarkar wants to know about Godfrey Phillips, bought at 2,240 levels, aiming for a target of 2,500. Should he wait for it, or do you think it will not be a good stock to hold at this point in time? 2,500 is what she's looking at.
Yeah, Sakshi, these stocks had a dream rally. Godfrey Phillips, they have won the business of cigarettes, which in the brand of Foursquare. But the recent GST hike for the cigarettes are concerned, that has been hampering the sentiment, and definitely it's going to have impact on the margins of the company. But they have the land bank story. So 2,500 can be possible. Just hold on to the stock. It can be possible whenever there is a positivity and a rally. She can book the profit at that range.
Okay. Anita from Varanasi says, I want to know about Alok Industries. I have 3,300 shares for 18.2 levels. I have it for 3 to 4 years time horizon. Would you advise me to stay in it for the next 3 to 4 years?
Sakshi, it's right now the holding company of Reliance Industries. The stock was in a speculative mode. Sometimes there is whenever the textile companies rallies, the stock go to 30. Again, we witness some kind of a profit booking. And in fact, this is the stock which has been testing the patience of the investors. There is no fundamental change in the company prospects. Still, the balance sheet is giving some kind of pressure to the company. Profitability is not able to come. So there are many decent companies one can invest in these kind of markets, which are much more favorable and less risky. So any rally in this stock, book profit, and there are much better companies one can move on.
Okay, let's take the next view, and this one is from Akshay. He wants to know from you a short-term view on Chambal Fertilizers, and the second stock is HCC, Hindustan Construction Company. Chambal Fertilizers and HCC, a short-term view.
Sakshi, normally short-term view at this point of time for Chambal Fertilizers, because the reason is normally there is a tendency these stocks tend to outperform during the monsoon season or the Q1 of the financial year is concerned. So the short-term view, I tend to avoid this stock in a medium to short-term perspective. HCC, some kind of a speculation that has been taking place in HCC. Sometimes some kind of a pullbacks one can witness. With respect to the medium to short term is concerned, I tend to avoid. This is HCC or NCC, Sakshi?
HCC, Hindustan Construction Company. We are actually showing the wrong stock on air. We need to show HCC.
Yeah, HCC, I tend to avoid HCC on a fundamental perspective. There are much better companies are available, still in the medium to short term also.
Okay. Next we have a question from one of our viewers again on our WhatsApp. This one is from Satyan. He's from Kerala, and he says, I have two questions. KEC International and CAMS. Can these two stocks be entered at the current levels for long term? What kind of levels would you advise me to accumulate both these stocks for the long term? KEC International and CAMS.
KEC International, the investor can start accumulating, Sakshi. This is the range in a staggered manner. One can start accumulating. This is the first price point one can take, and at dips one can accumulate. Same case with CAMS. The stock is in a consolidation phase, and given the kind of the market infrastructure, stocks are expected to position to do well, and CAMS also one can start adding at this level, and both the stocks one can add in a staggered manner.
Okay. Next we have Kamlesh Narkhere writing a question saying, I have a question on Schiller Tech and Schneider Electric for long term. What is the best buying price for both these stocks? Schiller Tech and Schneider Electric.
With respect to Schneider Electric is concerned, actually the stock had a strong rally. It went to the range of 1,000, and from there onwards we are witnessing a consolidation in this stock. In fact, if the investor is tracking this stock has been a multi-bagger for the investors in the last 3-4 years. And if the investor want to take any fresh entry, this is the range one can add. But I tend to take any kind of significant position in this stock post this quarterly results. So one can keep this as a first pricing point at this point of time. But the second point of purchase,
Schilcher Technologies,
the investor can start buying post the result.
Okay, got that. I hope Kamleshji this has answered your question. Sheetal Agarwal, she says, I want to know about NMDC. My buying price is at 47. Should I hold or sell? NMDC, GMDC kind of stocks have been coming back into focus. especially because of the rare earth minerals case? How would you advise?
Yeah, one can hold on, Sakshi. These stocks tend to move in long cycles, and now the cycle looks very positive for NMDC, given the kind of a metal demand. That's what we are
Yeah.
witnessing. But NMDC tend to produce by and large iron ore. So iron ore prices are stable at this point of time. But when the metal cycle takes a uptick, so that tend to last for a longer time. So the investor can hold on to NMDC at this point of time.
Okay, got that. Sanchit wants to know from you, Kranti ji, on ONGC. What's your overall view on ONGC right now?
On a medium to short term perspective, Sakshi, ONGC at this point of time, we need to closely observe the global crude oil prices, how they are going to be. If the crude oil prices are in a consolidation phase, then I tend to avoid ONGC. There are much better companies one can accumulate and one can give much better returns. But if the investor is a conservative investor and happy with the kind of dividend yield these stocks tend to offer, she can make a entry for ONGC somewhere around 230 or 200. That is the good range to take a entry. The stock also recently witnessed some kind of a rally in the recent past, but one can start adding ONGC on dips.
Okay. Namish says it's a very useful show for us. Thank you, Namish, for writing in warm words. His question is on Rolex rings. At 129, he has a position. Could you share with him a target of if he wants to hold for long term? What kind of expectations can he have?
Sakshi, with respect to Rolex rings is concerned, the stock is in a consolidation phase at this point of time. Valuations looks attractive at this point of time. One can hold on given the kind of the capital goods and ancillary space is concerned. These stocks are expected to do well, but before that, it's going to test the patience because the mid and small cap space in a consolidation phase. One can buy the stock, hold the stock at least with a time horizon of 1-2 years, then the stock can perform well.
Okay. Next, we have this question from Jaya. Wants to know about Balmer Lorry trading at 70 odd levels. What is the expectation that you have on this stock?
So actually, I don't give an exact target for these stocks because Balmer Dairy, they have a logistic business and it's a PSU. The stock is currently at 170 range. Okay, the stock came from a range of 230. There is a PSU rally is due in many of these PSU stocks. The budget disinvestment, any kind of a news with respect to disinvestments are concerned, if that comes, we can expect some kind of a rally in this stock. At this point of time, I don't take any fresh position, but if the investor is holding the stock, one can hold on to the stock.
Jaya, in fact, Balmer Lorry is trading at 174 and not at 70. So, are you sure that you are asking the right stock because you've mentioned the wrong price? Or do you think that you're holding at this level? Your question is not clear. So, please do ask again with a clear question and we'll be able to happily answer your question again too. Last question that we will take on the show from our viewers is from Satya Narayana from Hyderabad, who wants to know about quality pharmaceuticals. Says, I'm holding these shares in my portfolio. My average price is 600 levels. I want to know about what is the management quality of this company and should I be holding on to my position?
Yeah, with respect to quality pharma is concerned, Sakshi, the stock is.
Yeah.
I'm not getting the quote for the stock. Okay.
Okay.
Actually, it's a delisted one, it seems to be. Okay, I don't have any view on this stock at this point of time. I'm not getting the quote.
Currently trading, it's a BSE listed stock, sir, so maybe that's the issue. 1049 rupees is what it is trading at currently. And if you look at the last 5 days, it's been a slightly lower trend, but in the last 1 month, it's moved up about 11 odd percent. But it's been in a downtrend all the way since July of 2025, touched a bottom maybe in 11th November of 2025, then moved up slightly and is moving sideways since then.
My apologies, Sakshi. I'm not getting the
Okay.
quote for this stock.
No worries
It's
at all.
not on my radar.
Okay, we'll then take the one last question from Mr. Hari Krishna, wants to know about IDBI Bank. Can he add the stock in his viewers in his portfolio as far as the current levels are concerned? He wants to know about IDBI Bank. Is it good to add at the current levels?
So actually, the stock had a strong rally, but the disinvestment news is still hanging around every time, every financial year, whenever the budget day comes, or any time, one expects a disinvestment. So that has been not getting finalized. So if the investor have a 1-2 years perspective, start adding IDBI Bank. The stock has witnessed a strong rally, and also we are seeing a fundamental shift in terms of the earnings of the bank also. So at the range of 100, one can start adding IDBI Bank.
Okay, now Jaya has come back with her question again. Jaya says that I'm actually asking about Barmer Lorry Investments that's trading at 69.7. If that is the right one, Jaya, please do mention on our YouTube channel if that is the stock that you're looking at. It is a BSE listed stock. So I'm not sure if Krantiji actually looks at that stock at this point in time. Barmer Lorry Investments instead of Barmer Lorry Company. How would you look at this one? It's a BSE listed stock. We will not be able to show you this stock on air, Jaya.
Yeah, this is a demerged entity, Sakshi, listed separately on BSE. The stock got demerged from the Balmer Lorry. So it comes up with the kind of the non-core investments, and also the land bank is concerned. I tend to book some profit from the table any rally in these kind of stocks.
Okay, right. Krantiji, many thanks then for being with us on the show and for helping all our viewers out resolve their queries completely. I hope all our viewers, we've been able to take maximum questions today. But do stay tuned. A lot more coming up on your screens throughout the course of the session today. And of course, I'll be back for the closing edition at 3 p.m. Don't miss that one too.
The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January. Only on India Today and Business Today.
US President Donald Trump has once again rattled global trade with a sweeping announcement.